Hello, greeting friends. Welcome to the accountancy lessons. This is the conclusive part of the lesson, basic term of accountancy, in which we'll try to understand the terms like insolvent, solvent, book value, balance sheet, entity, COGS, and cost. Now, COGS is the abbreviated term for the value cost of goods sold. Now, what is insolvent and solvent? Insolvent and solvent are two comprehensive terms which is used to describe an enterprise's or a person's ability to pay its debts. In short, if any person or an enterprise is not able to pay the firm's debts, the person or an enterprise is known as insolvent. And if the person or an enterprise is able to further pay its debts, he is known as solvent. In the previous video, we discussed the concept of bad debts. Now, what is bad debts? Bad debts is the irrecoverable amount from the debtor which he is unable to give on the part of various reasons like bankruptcy, etc., on the basis of which he can serve accounting data as a good evidence in courts. Now, bad debt example to it is, for example, if you have purchased 10,000 rupees goods on credit basis from me, so you will be called a debtor and I will be your creditor. So you have to pay me back rupees 10,000, but you are only able to pay me back rupees 6,000, and the rest 4,000 rupees is irrecoverable from you. So it means that you are insolvent up to rupees 4,000 and you were solvent up to rupees 6,000. But if you are able to pay me back whole of rupees 10,000, that means you are a solvent enterprise or you are a solvent person. Now, what is book value? Book value refers to the amount of the good, asset, or any service which is exhibited in the balance sheet of the firm. That is, it is used to indicate the asset's price at the current period of time on the balance sheet. For example, if I have purchased a machinery 3 years ago worth rupees 1 lakhs and I am applying 10% depreciation over it on the basis of straight line method. So the price of the machinery was 1 lakh rupees. In the first year, we applied depreciation worth rupees 10,000 on the basis of 10% straight line method. The remaining balance was rupees 90,000. The next year, that is in the second year, we applied again the depreciation over this 90,000. That is 10,000 rupees depreciation. The book value of the machinery was reduced to rupees 80,000. This year, that is in the third year, the machine's value got deducted to rupees 80,000. Now again we apply depreciation by straight line method at the rate of 10%, 10,000. Here we go. 70,000 is now the deducted balance from 80,000. That is 80,000 minus 10,000 is equals to 70,000 rupees is the current book value of the machinery now. So the machinery will not be recorded at the cost price. That is, it will not be recorded at 1 lakh rupees on the balance sheet now. It will be recorded at 70,000 rupees. This 70,000 rupees, which is allocated after allocation of the depreciation cost, is known as the book value. That is, it refers to the asset's current value, that is cost price minus depreciation, to be recorded in the books of accounts. Now, what is balance sheet? Balance sheet is a statement prepared by the proprietorship firms and statement of profit and loss in case of companies in order to measure the financial performance of the enterprise. That is, what are the assets and what are the liabilities of an enterprise, what are the properties and rights exercised by the enterprise, and what is being controlled by the enterprise, and what are being the obligations of an enterprise. Now, the balance sheet is prepared in the case of proprietorship firms after according all the revenues and all the expenses in trading and profit and loss account in case of proprietorship firms. balance sheet is divided in two sections, right section and left section, in which left section is of liabilities and here is assets, right section. Assets belongs to the right sections. In assets you can write about the properties, current, non-current assets and intangible assets like copyrights, etc. So this will be written off in the right section of the balance sheet. For example, computers, furniture, machinery, plant, stocks, bank account, cash account, balances will be written here. And also some expenses like the benefit of which will be accorded in the next accounting period, like prepaid expense, the expense which you have incurred right now, the benefit of which you will be receiving in the next accounting period. For example, जैसे कि 12,000 रुपए आपका रेंट है एनुअली and the accounting period as starts from April 1, 2017 and ends on March 31st, 2018 और आपने up till मई 1, 2018 तक का पैसा दिया हुआ है, दैट इज 13,000. तो 12,000 आपके रेगुलर एक्सपेंसेस होंगे और जो 1,000 होगा, 1,000 जो कि आपने अप्रैल टू मई 2018 दैट इज नेक्स्ट अकाउंटिंग ईयर के फर्स्ट मंथ का आपने पे कर रखा है, दैट विल बी कॉल्ड एज प्रीपेड एक्सपेंसेस. तो वो एक्सपेंस भी एसेट साइड आएंगे. और लाइबिलिटी साइड आएंगे आपके आउटस्टैंडिंग एक्सपेंसेस. आउटस्टैंडिंग एक्सपेंस का मतलब होगा जैसे कि आपके हर महीने के 1,000 रेंट है, हर महीने का रेंट आपका 1,000 रुपए जो कि आपको लैंडलॉर्ड को देना है और आपने अप्रैल 2017 से लेकर के मार्च 2018 के बीच तक आपने सिर्फ 10,000 रुपए रेंट दिया है. यानी कि आपने 10 महीने का रेंट दिया है और आपने 2 महीने का रेंट छोड़ा है, दैट इज ऑफ फरवरी एंड मार्च. फरवरी 2018 का आपने नहीं दिया और मार्च 2018 का आपने नहीं दिया. तो जो 2 महीने का रेंट है 2,000 रुपीज, दैट विल बी द आउटस्टैंडिंग एक्सपेंस. तो वो आपके लाइबिलिटी साइड में आ जाएंगे, दैट इज ऑन द लेफ्ट हैंड साइड ऑफ द बैलेंस शीट. और लाइबिलिटीज में आपके आ जाएंगे ऑब्लिगेशंस, जो भी आपने लोन्स ले रखे हैं, लोन्स फ्रॉम बैंक, लोन्स फ्रॉम फ्रेंड्स एक्सेट्रा, लोन्स फ्रॉम रिलेटिव्स. आपके कैपिटल आ जाएगी, कैपिटल आपने कितना इन्वेस्ट किया हुआ है फर्म में, कैपिटल से आप फिर ड्राइंग्स आप डिडक्ट करोगे, ड्राइंग्स कैपिटल. Outstanding expense, prepaid expense and outstanding expense. Now what is an entity? An entity is an economic unit which performs business activities in accordance with the other legal authorities, like proprietorship firms हो गई, company firms हो गई, फिर कोऑपरेटिव ऑर्गेनाइजेशंस हो गए. तो इनको हम एंटिटी कहेंगे जो इकोनॉमिक एक्टिविटी परफॉर्म करती है, दैट इज रिलेटेड टू प्रॉफिट मेकिंग. तो उन्हें हम एंटिटी कहेंगे विच परफॉर्म्स वेरियस एक्टिविटीज लाइक अकाउंटिंग, मार्केटिंग, सेलिंग एक्सेट्रा. वो जितने भी फर्म्स जो बिजनेस एक्टिविटीज परफॉर्म करती है, इनके वेरियस डिपार्टमेंट्स होते हैं, दैट्स कॉल्ड एन एंटिटी. एंटिटीज ऑफ वेरियस टाइप्स लाइक इज पार्टनरशिप फर्म्स, प्रोप्राइटरशिप फर्म्स, कंपनीज, देन जॉइंट स्टॉक कंपनीज, कोऑपरेटिव सोसाइटीज हो गए. तो ये हमें एंटिटी, जैसे कि एग्जांपल ले रिलायंस इंडस्ट्रीज, फिर एयरटेल हो गया, फिर एप्पल हो गया, माइक्रोसॉफ्ट हो गया, ये सब हमारी एंटिटीज हुई. कॉग्स एंड कॉस्ट. कॉग्स COGS stands for cost of goods sold. COGS refer to cost of goods sold, and cost of goods sold refers to the direct cost involved in making of the goods for selling and distribution of the goods. अब उस goods को directly बनाने में किस तरह के कॉस्ट का वो हुआ होगा, जैसे वेजेस फ्रेट्स हमने आपके साथ पहले भी डिस्कस किया हुआ है. Gross profit और net profit में we have discussed in the earlier videos, in the previous videos, about gross profit and net profit. Gross profit, where after we discuss revenue from sales minus the direct cost involved. Direct costs were of types like freight, wages, light and electricity, carriage inwards, carriage outwards. So these were the direct costs. Opening stock is also involved along with closing stock in the preparation of trading account, in which gross profit is made, in which gross profit is concerned. So cost of goods sold is the direct cost attributed to the goods and services which is to be sold and distributed. Now what is cost? Cost is all the types of cost, that is direct cost plus indirect cost. Indirect cost involves various types of costs like legal expense, telephonic expense, telephone charges, advertising expense, interest on loans, interests, various kinds of interests, then expenses on processing fees, etc., auditing fees, stationaries, then rent, salaries, etc. These are the indirect costs, and the direct costs on attributable on the goods and services which are to be sold and distributed is known as costs. So cost is equals to COGS plus indirect costs. So by this we complete the basic terms of accounts in a comprehensible manner. Hope you would have understood the terms clearly. So the next video will be about the rules of debit and credit. Thank you.